On-site coverage of the Precious Metals Summit is brought to you by Borealis Mining.
Hello, welcome back. We're at the Precious Metals Summit here in Beaver Creek, and I'm with Florian Grummes, the Managing Director at Midas Touch. Florian, you were the keynote today, this morning. What were the main findings that you were sharing with the audience?
Yeah, first of all, Peter, thanks for having me. It's a pleasure to be here.
More than welcome.
Well, I pointed out, first of all, 4 macro drivers that I see in the gold market that probably will make sure that this bull market lasts longer than a few years from here. So obviously, we all know it's been the central banks buying over the last 3 years that has increased, and that actually they came back into the market all the time. So then the second driver I mentioned was, of course, China is also well known that they basically buy everything they can get their hands on. And then the third one is the liquidity. You can see M2 money supply for America, but also on a worldwide basis, going higher dramatically. And the fourth one is the bear market in the bonds, which I assume will drive more and more institutional money into the gold market.
And especially on that last one, it seems with sort of the mounting government debts in the Western world and the lack of confidence in being able to pay that debt, it seems like those bond markets aren't going to fix themselves anytime soon, does it really?
I don't think so.
Yeah.
I mean, the Fed might lower interest rates,
Yeah, well, it looks
but
like
I
next
think
week,
they're
right?
losing control of the long end of the bond market. So,
Yeah.
I mean, I don't see how they bring down interest rates and the long-term interest rates. And of course, especially institutional money is playing that part of the market. And what can they do if these so-called safe, conservative, long-term bonds are not performing anymore?
Yeah.
Where can they go? So they go to gold, of course.
Yeah, and obviously then you've got this whole mix-up of the central banks, obviously the institutions now all dipping into gold. You've made some pretty bullish calls on the metal and silver as well, for that matter, recently. I just wanted to sort of get a bit of an understanding of where I think I saw something along the lines of $500 silver or something that you were talking about. Is that something that you realistically think is going to happen?
I think it's possible,
Yeah.
but I mean, of course, there is a disclaimer. It will take some time. It's not going to happen tomorrow or this year or within a year. I showed it in my presentation this morning that if you look at the silver market, I mean, there is this huge cup and handle pattern in the making, 55 years.
Yep.
Energy being compressed. And we have seen what happens when a cup and handle consolidation gets released. We've seen it in the gold market, right? We had that situation last year in February, March. Gold broke out, and here we are, $1,650 higher, and there's no stopping. I mean, this bull is just running, especially now in the last 3 weeks. Crazy bull run. So once silver really clears that $50 level, clearly breaks out of this long 55-year consolidation, you take the depth of that cup and put it on the breakout level on a linear chart, this will take you to $100. On a logarithmic chart, which usually you should use for such long time frames, it will take you to $500.
Right, okay, so there is a bit of maths behind it.
There is some math behind it, and I mean, the 4 macro drivers that I mentioned initially, they will not go away. I think we're still maybe at the half of this bull market, and the best is yet to come. We know that an asset like gold in a real bull market, and I remember, of course, the 1970s here, the last few weeks, 1979, gold went from 400 and something to 890, it doubled within a few weeks. So let this happen again from a level maybe around $5,000, $6,000, $7,000 in the next few years. And then the grand finale, it doubles within a few weeks. It takes you to 10,000, 15,000. And then you remember the gold-silver ratio at a peak, at the top of a bubble in the precious metals. You could assume that this ratio is probably trading at maybe 35 to 1 or even at 15 to 1. That's where it traded at the top in 1980. So yeah, then you do the math, and then I think it's much more realistic why I'm coming up with $500 silver down the road. But this is not happening tomorrow. This will take quite some time still. And right now, silver is still lagging. It's still playing safe. It's still rather cautiously creeping higher, I would say. You have some strong up days, and then it takes weeks, sideways consolidation. So we have not seen that typical behavior of silver when it really storms on the dance floor, takes over the mic and runs the show and doesn't care anymore about gold, right? We are not there at all. So I think the best is yet to come.
Yeah, it's funny with silver, and it's something we've spoken about on the show before, is that you have this structural deficit within silver for so many years now, and yet we still haven't seen that breakout. What do you think we're waiting on to see it?
Well, I mean, silver is always late to the party.
Yeah.
So that's always the case. I remember very well people complaining in 2009, doubting the gold bull actually because silver was lagging so much. And then suddenly, autumn 2010, silver said, here I am at $17, and there was no stopping anymore. And it went from 17 to 50 within 8 months.
Yep.
So something similar I can imagine now. And as I just said, it's just not there yet. It just takes time. Silver is lagging a bit. Also, you have to understand that silver is basically gold plus the perception of the inflation. Mm-hmm. And I think we need some more higher inflation numbers that silver really can kick in. But at the same time, I think everything's ready. Everything's on the table. Supply is really tight. Demand side is very strong. Especially from China, of course, solar industry, but also India. I mean, you have lots of reasons to be bullish on silver now. It's probably becoming a critical mineral even.
I think the US just appointed it as a critical mineral, didn't it?
Yeah, exactly. Yeah. So, I mean, there's so many bullish drivers. So it's just a question of time, and we have to be patient. And I just always say, like, it's great to be able to still buy at these levels. I mean, gold is, for me personally, too expensive to buy more at these levels.
I've been saying that since it was about 2,500, and I wish I bought some more, you know?
Yeah, so for silver, I think it's still a good bet at $40. I mean, you always have to think in risk reward. If you take my conservative price target of $100 from $40, that's still a nice upside. Yeah. While I would say, looking on the downside, what's the worst case? Maybe a pullback to 30, right? So I think that's a pretty good risk-reward ratio that you can hear by holding the plain, simple physical metal. I mean, it's a safe trade, I guess.
Yeah, and how are you looking at, you were talking about the four main drivers there at the beginning, obviously central bank purchasing, China,
liquidity, the money supply expansion basically, and the bear market in the bonds.
Hi, I'm Kelly Malcolm, founder and CEO of Borealis Mining. We're reigniting gold production in Nevada, one of the world's most attractive mining jurisdictions. Our flagship Borealis project is 100% owned and fully equipped for production today, with power, water, workforce, permits, and even a modern ADR facility already in place. We've started crushing high-grade stockpiles, and our first gold pour is just around the corner. Historically, Borealis produced over 600,000 ounces of gold, yet much of our 21 square mile land package remains unexplored, with nearly 2 million ounces of historical resources and past drill results up to 67 meters at 16 grams per ton. The upside here is tremendous. But Borealis is just the beginning. Through acquisitions like our nearby Sandman project, with a strong PEA showing 35,000 to 40,000 ounces per annum and $121 million NPV at $1,800 gold, we're building a hub-and-spoke model designed to deliver scale and efficiency. Our vision is bold, to grow into a greater than 100,000 ounce per year Nevada powerhouse within the next 5 years. With a proven team, strong shareholder support, including mining legends Rob McEwen and Eric Sprott as major backers, and multiple catalysts ahead, we're positioned for both near-term cash flow and long-term growth. Follow our journey at borealismining.com or connect with us at info@borealismining.com.
How much of, and I guess does this tie into China and central bank purchasing in a way, but how much does the geopolitics of what we're seeing at the moment in terms of, well, this changing divide of, you have the emerging power of China, sort of now the US also using dollars as in a weaponized way. You've got this real scenario where there's a lot of unrest around the world, and it's probably one of the most dangerous times in my lifetime that I've seen anyway. Yeah. How much of that is a driver, or is that sort of tied into why central banks buy, and is that tied into why China?
I think it's tied in.
Yeah.
But at the same time, I mean, you can probably also make the argument that there is a certain war premium in the gold price due to the invasion of Russia into Ukraine and this whole messy situation there. But I mean, you can see it over the last few weeks. There was this meeting, Putin and Trump, which I personally think was already a great progress in this whole thing, because I'm for peace. I'm not a warmonger. It's very important that people get along with each other, even though it's complicated. But you see exactly that. It's extremely complicated to make the next step here and to create a solution. And there is still, especially in Europe, lots of warmongers in UK and also in Germany. And there's also, of course, lots of interest from the weapon industry. And they, by the way, need a lot of silver to run this war.
Yeah, of course, yeah.
So it's tied into a part. I mean, it's always fascinating the more you dig into gold, how much it is a geopolitical play as well.
Yeah, 100%.
And of course, China needs to diversify out of the dollar, also away from the euro. And what is left also for them to basically create or put more confidence in their own currency, right? They need the gold backing, right? Yeah. So that's what's happening. And I mean, this could be a trend for the next decade. So if I came with this big $500 silver price target and price targets for gold above 10,000, I mean, this could take a decade or even longer.
Yeah, I think that's what's quite unique with this bull run, is that it does feel like we're still early on in terms of the geopolitical factors and the shifts that are happening around the world.
Right.
In my own view, this is a big part of what's going on with the gold price, and this is a big reason why the central banks are purchasing, as well as sort of moving away from the US dollar. So it's not like the China or Russia or any other country around the world is going to say, okay, well, we've got enough gold now, so we'll just stop buying it, given that we're in this scenario where they are trying to de-dollarize.
Right.
How much of an influence now does the Fed have? Because obviously everyone here is talking about obviously rate cuts next week. Is that still for you one of the key drivers that we're seeing in the space?
I don't think so. I think that the Fed actually is rather reacting to what the market is pricing in over time. And of course, people are completely conditioned to look at these short-term events, but I think it's very misleading. I pay attention because I have to, but I don't think it's so important in the longer run. I mean, you see that gold is now being in rally mode for 3 years. Well, we had the triple low at 16.15 nearly 3 years ago, and the Fed back then was still hiking. And now the Fed is very late to the game. The Europeans have already reduced interest rates. The dollar is in free fall over the last few months. I'm not sure. I think that they're losing the control of the long end. That's probably the more important part of the whole thing. Let's see how this all plays out. I mean, you have, because you just mentioned it, I mean, it's really fascinating. You have Russia, you have China, you have India, and some other emerging market countries buying gold to back their currency, to build up reserves and everything. And they clearly made a decision pro gold. And then you have America with the Trump administration pushing digital assets like crazy, talking about a Bitcoin reserve. And Wall Street has been embracing the whole Bitcoin and digital asset space. You see on a daily basis new stocks and new treasury companies coming out. I think it's super fascinating time, because it's very hard to really predict what's, in the end of the day, going to be the outcome. I mean, we can assume the long-term track record of gold probably speaks more towards the countries in the East, but who knows? I mean, we're also living in a digital age now. It's very interesting times. I assume that at some point America will come up with some form of a stable coin, a dollar stable coin backed by gold. I think something like this probably is the idea. And I mean, it's fascinating to see the regulatory changes that the Trump administration has brought on the way. I mean, it's incredible. If you would have told me this a year or 2 years ago, what they have changed, and now the whole Trump family is speculating on Bitcoin, bringing out their own tokens. I mean, it's totally absurd and at the same time fascinating. I mean, it's casino capitalism in a way, and at the same time you have a completely managed economy. It's fascinating. Who knows how this all plays out? I think we're all very safe if we have some physical precious metals in forms of gold and silver. And also, I very much like platinum. I think it's still lagging as well.
Yeah, okay. I wouldn't even mind chatting a bit about platinum. It's obviously the demand profile for platinum is always been more closely tied to catalytic converters or sort of the auto industry.
Right.
We did see a bit of a flurry of demand where the gold price had gone up so high in China. We did see some demand come in over the summer where a lot of jewelers in China were trying to, I guess, market a platinum products to see if they would sell. I think we're still waiting to see the data, whether or not that worked. I think we've had a bit of a pullback on platinum to what, 1,350, 1,300 odd. In terms of your outlook for platinum, is it more around are you envisioning that, say, central banks might start hoarding it, or is it more the jewelry side of things, or is it more the actual that we aren't quite going into that battery market as quick as we can, so actually auto demand is still quite strong?
I think it's an interesting point that you're making, because I hear from some sources that it's more and more difficult for these big sovereign players to get their hands on enough gold, So what can they do? So they might look into silver, like the Saudi Arabian central bank just recently did. Small position, I think they took 30 million or something and bought some SLV and SIL. So maybe just a little tasting or whatever, but you're right, that could actually happening down the road, and I mean that would completely change the platinum market overnight.
Well, this was something Mark Faber said to us a little while ago, was if you were a central bank and you were smart, you would buy loads and loads of platinum and then actually announce that you'd been buying, and then you'd rack you rack up the price to $10,000, and all of a sudden a lot of debts are solved.
Yeah, I mean, I'm also, of course, a technical guy, and I just look at the gold platinum ratio.
Yeah.
And I remember when I started in that sector 20 years ago or 25 years ago, platinum used to be double the price of gold.
Yep.
So I think this ratio is completely out of whack. By the way, also the gold oil ratio is also, gold is too expensive in comparison to oil right now. So will oil come down? Will gold come down? It doesn't look like, right? So it probably means that the other commodities have to play catch up, and that's what we usually see in a commodity super cycle. So that's the main reason why I believe platinum has a good future here and is an interesting investment. It's been lagging. I love to buy physical platinum, yes, and I do myself.
Okay, and what about the strength of the US dollar? So obviously we've been seeing a weakening of that really since Trump came into office. For me, obviously, it's one of those things with weakening of US dollar that it should, in general, just pick up commodities in terms of their pricing, because you do have that lower dollar. Is that, how much, we're talking about how much the Fed influences, how much do you think the US dollar, in terms of the weakening of the dollar, has an impact on the price of gold?
It has an influence, of course, but I mean, look at the exchange rate of the dollar against the euro. The euro is trading way below its 2008 high. I think it was at 160 against the dollar.
Yep.
And here we are, gold at 3,600. Gold was trading back then around $1,000 at the peak before the financial crisis. So I think gold is doing its own thing in the end of the day.
Yeah.
And a weak dollar helps. But I feel like it has emancipated itself completely, and it's not working anymore like this simple thought process, like weak dollar, gold up, strong dollar,
it's funny you
down.
say that. It's funny you say that, though, isn't it? Because it used to be that you had this inverse relationship with interest rates, you had this relationship with the US dollar. Gold was almost in a way quite easy to predict and quite easy to play, right? Because you could just look at when certain financial events were due to happen and what you thought the outcome of those could be, and then that would have a big impact. Still does have an impact, but like you were saying, there's this underlining sort of thematic underneath this now, isn't there, that probably just wasn't there.
Look, I think we have to accept, and I mean, it's very obvious, the gold market has completely changed.
Yeah.
It's a completely different thing today than 20 years ago in this first bull market from 2001 to 2011, and then also during that lengthy consolidation, that cup and handle pattern I talked about. You have this physical demand out of China and Asia, and the physical demand from central banks. And on the other hand, you have 5 decades of 150 to 200 paper ounces of gold being traded for 1 real ounce of gold.
Yeah.
And that was how they figured out the price. And this is ending, and that's the remonetization of gold. And that's also part of the strong rally that we're seeing in gold. It's a short squeeze, it's a short covering of all these institutions and companies that have sold some form of a paper gold short, right? I mean, they tell you we have this kilogram for you in our vaults, but actually it's not really there. Or they sell you some whatever fund structure kind of product, and it's actually not backed by anything. And now that people becoming aware how serious the situation is, that they want to see the gold, and then they realize like, oh, it's unallocated. They might not have the bars actually.
Well, I think the ECB released a report some time ago, about 6 months ago, saying that this could cause a financial meltdown if everyone asked for their gold. Because there's been so much trading of the same bar, essentially.
Exactly. And you see what's happening with the LBMA. I mean, they're basically broke already because it took them like 2 months to deliver the gold.
Well, they were blaming that on logistics and weighing the gold and whatnot. But
I mean, that's technically a default, I would say. And that's what's driving the price, I guess. And you also see the deliveries and the COMEX. So it's all pointing in the same direction. And what we always said, the physical supply is tight. You cannot create gold out of thin air, right? And I mean, if you trade 200 paper ounces for 1 real ounce, and now you have to unwind this whole trade.
So essentially, if you would I guess you've got to recommend, if you're going to do it, you really need to own the physical then, do you?
Like my recommendation personally when it comes to pressure, I mean, I think the best way really, unless we're talking about huge amounts of money, is like physical, ideally in your own hand, ideally in a vault that only you have access to outside the banking system.
Okay. And so, for example, we're sitting again here this time next year. Where do you think we're going to be in the gold cycle?
Interesting question. So I gave 3 targets this morning. I said out of the height of this triangle consolidation of the last 4 months, I thought the next target is 3,750-ish. Then, since we are in uncharted territory here, you need market psychology, and round numbers are always attractive and somehow working as a magnet. So I think 4,000 then is the next target, and then you take a measured move from basically this whole rally since mid-December until late April, and you use that, and that is really like a $950 kind of dollar move, and you put that on this recent breakout just 2.5-3 weeks ago, and you end up around 4,300-ish kind of dollars into, I think that's until next spring. Then considering that we're going to see some form of a consolidation, like always in spring and early summer, and then a pullback. But I think by Beaver Creek next year, we are definitely above 4,000, maybe already around 5,000.
I was saying this to Adrian Day earlier when we were having a chat. I used to look back, back in 2016, 2017, people would be calling for $5,000 gold back then, and I'd think, these guys, they are insane, But right now,
it's happening so fast.
I'd be more surprised if it didn't happen, to be honest.
I mean, in the very short term, we are a little bit overbought. We are a little bit stretched. It's been quite a run the last 3 weeks. You see lots of the mining stocks like spiking, kind of like vertically higher. And we have a seasonality kind of challenging time frame between October and mid-December. Typically, usually over the last 15 years, gold finds a turning point mid-December with the last FOMC meeting. That has happened like clockwork over the last 15 years. And before that, you usually had a weak kind of period, at least a pullback or a consolidation, October, November into mid-December. But what we have seen over the last 2 years as well, I mean, these consolidations have been rather on high levels, rather playing over time than over price. So this sharp initial pullback was also always the low. And then you had like a multi-week, multi-month consolidation on high level, and then already the next move higher, because the physical demand is there, and immediately a little pullback, and big institutions, I guess, are stepping in already.
Yeah, of course. Is there anything in your mind that you could foresee as what could, I guess, almost halt the gold rally that we're seeing? Are there any risks that you're foreseeing?
I mean, the normal risk that we always have to be aware of and accept is in case the stock market would get into bumpy kind of waters or really into trouble, it would affect the precious metals sector, similar to what we've seen in the financial crisis. Back then, gold just had made the new all-time high at $1,038 at the day of the announcement that Bear Stearns was insolvent, and that was the top. and then you would see gold sliding down over the
Right.
following 6 months, and it lost like 1/3 of its value, simply because the whole market broke down,
Yeah, of
and
course.
suddenly liquidity disappeared, and people had margin calls, and they needed to cash in their physical metal to pay other bills or whatever, or at least run their portfolios. And of course, the miners suffered tremendously.
big time, yeah.
But gold was also the first one to find the bottom back then, and then turned around violently, and then started that rally towards 1920. So I don't think that we most likely going to see something like this again, a big financial crisis, simply because the system is so unstable now.
Yeah.
They cannot let this happen. So we're going to see them immediately flooding the markets.
Right.
And remember, this year we had a kind of a situation like this, late March, early April, massive panic in the stock market. People were really panicking.
Yeah.
And within 2 weeks, like magic, liquidity appeared again.
Yeah.
Like and 2 months later, new all-time highs in the S&P 500, right?
Yeah.
So that's, I think, the recipe going forward. If there's any turmoil in the normal stock market, they will print so much money that to make sure that overall we're moving higher. And that's the cracker boom. That's the liquidity that we mentioned initially. That will drive everything higher. So I think that's often something that I see with the gold bugs, that they always expect the stock market to crash and then gold will take off. But actually the stock market can move higher and gold can also move higher. And what we see now this year, the mining stock have outperformed everything, and gold has also outperformed even Bitcoin, right?
Yeah, just another good reason realistically is obviously one of the other things that will go higher is inflation, and the purchasing power of your dollar is going to reduce. So, and really it's, even if that worst case scenario does play out, you're still better off owning some gold, I think.
Exactly. I mean, even in such a dramatic worst case scenario, let's say the stock market really breaks down, gold will lose less than the stock market, it will lose less than Bitcoin, it will lose probably less than many other assets.
Yeah. No, agreed. Florian, thank you for your time.
Appreciate it.